2025 was our biggest year yet, both in revenue, but also gross margin and bottom line net income. We grew our balance sheet rather than just maintaining. So, with that increased profitability, we actually have some equity and some capital in house now that we could use to offset that factoring balance, to not borrow money to fund our receivables or to fund our payroll. So, just in kind of general sense, everything is so much better. Load is lighter on the company. Hey, I'm Cameron. I'm the COO of Monroe and Weisbrod. It's a staffing and recruitment firm. We're a boutique agency. And so in my role, I kind of handle a lot of different hats, but that includes the operations, financials, and the technology. Before working with the Profit Doctor, our business was growing, but not as fast as we wanted to. And we're kind of drowning with what to focus on, what's the next lever to pull, what's the next thing to do. I think what prompted us to enroll in the Profit CFO course specifically was we didn't have a lot of understanding of what we were looking at when we were looking at our finances. We're looking at our financials. They were so long, there were so many details. We weren't really sure what to look at, what to focus on, or even what to glean from it. There's just not a lot of the clarity inside of the financial side of things. Before the Profit CFO course, our financials were there and our books were clean. The entries were entered and the information was correct. I think we sent an email out to the owners or the management with just the P&L and the balance sheet each month, and nothing ever happened with it because it was so detailed and there's so much info to see in it. We were just going off the sales dashboards and our sales tools, what kind of our revenue was. So financials were present, but not usable in any sense. Having legible and readable financials makes the world of difference when we sit down each month to discuss what happened and where we want to go. We can look and see now exactly what's kind of driving the revenue. Why did these expenses jump so much? Where should we focus the next, 2, 3, 4 months to really increase that bottom line net income? It was huge. Some of the tips were small things, just moving where lines lived, but immediately made it clear what was happening. There wasn't any mental math to remember what happened. With those clean financials, we could then compare month to month way easier than we could before. Factoring, it's a small fee per invoice, but when you really look at the numbers across a year and it's cleaned and simplified, you realize the effective annual interest rate is insane. And it made a lot of sense back 10 years ago when the company first started and there was no capital in the company. Seeing that interest fee just skyrocket based on every invoice we sent out was really eye-opening and kind of gave us the kick in the rear we needed to go explore other options. When we approached a bank, and started talking to banks about getting off factoring, many of them had said they have never seen it been done before. One banker said he knew of one company that did, but they had to declare bankruptcy and start an entire new company just with a line of credit just to get off factoring because it was so impossible. And getting off factoring could save us about $150,000 a year, which could be three more salespeople to go out, which would be double our sales team right there. It would free us out to do bigger projects, take bigger risks, or even offer better terms. Yeah, I specifically did the Profit CFO course, and doing the Profit CFO course, I found just rearranging a couple line items, minimizing, simplifying the P&L while it's actually less quote unquote accurate for what a bank would want to look at. It is so much more useful for us making decisions, for us deciding where we want to put our focus on in the next quarter, next year, next 5 years.